The S&P 500 and the Nasdaq see the second straight day of losses, while the Dow Jones ekes out a minor gain ahead of key employment reports over the next 2 days. Asian markets trade largely higher, while the GIFT Nifty is suggesting a gap-up start for our own markets. Crude prices slip further from 9-month lows hit yesterday. Brent hits $72 a barrel as demand concerns persist. Gold hits a 2-week low on concerns over the quantum of the Fed's rate cut trajectory. Reliance Industries becomes the sole successful bidder to set up advanced chemistry cell manufacturing facilities of 10 gigawatt-hour capacity under the battery PLI scheme. The company's board will also meet later today to mull a 1:1 bonus issue. Raymond Lifestyles business is set to list on the exchanges today. Sona BLW is eyeing a 2,400 crore rupee QIP, while the government is also likely to exercise the oversubscription option in the GIC OFS later today. And employees at Sebi write to the Finance Ministry raising concerns over a toxic work culture. The letter accessed by CNBC TV18 dated the 6th of August states that shouting, scolding and public humiliation has become a norm during meetings. Sebi responds saying such claims are misplaced and that protesting junior officers are misguided by quote-unquote external elements. Good morning. You're watching Power Breakfast here on CNBC TV18 in the Mumbai News Center. I am Hormas Fatakia. It's Teachers' Day today, and a thank you is not enough to all the teachers that shape up lives, and especially the ones who have shaped my life as well. So a big thank you to all of those teachers. Let's take a look at the Asian markets first up. And it's a positive start. There's been a recovery from the opening lows that the Asian markets had made. The Taiwanese index is an outperformer this morning at almost 2%, now trading with gains of almost 2%. The Hang Seng is trading around the flat line but continues to trade with a positive bias. The Nikkei at one point was down almost 1%, and that has come into the positive now. It's trading with gains of almost 0.2%. The Shanghai Composite has opened absolutely flat. Gains are also coming in from South Korea as well. So a positive start has been a recovery from the opening lows for the Asian markets, and pull up the GIFT Nifty as well. And regardless of the sell-off that we saw in the global markets on a Tuesday, the markets were pretty resilient yesterday as well. And today the implied open is also suggesting a gap up start for our own markets. Almost 120 points higher is what the implied open is suggesting, almost recovering everything that was lost in yesterday's trading session. But moving on to Wall Street, then it was a mixed trading day for the US markets because the S&P 500 and the Nasdaq closed lower for the second straight day, while the Dow Jones managed to eke out a small advance. Now all three averages are down for the week so far. The investors are awaiting weekly jobless claims data later this evening, and of course the non-farm payrolls, the all-important jobs data that is due on Friday. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
For CNBC TV18, I'm Bertha Coombs. U.S. markets were basically flat across the major indexes Wednesday as investors failed to kick off any kind of sustainable rally after Tuesday's sell-off. The Dow added 38 points, the S&P was down 5, and the Nasdaq was down 52. Shares of U.S. Steel falling more than 15% during the session after a Washington Post report that President Biden is preparing to announce that he will formally block the proposed $15 billion acquisition by Japan's Nippon Steel. U.S. Steel warned investors today that if the deal does not go through, it may need to shut its headquarters and several factories in the battleground election state of Pennsylvania. For its part, Nippon said that if the deal were to go through, U.S. citizens would actually make up the majority of the board and senior management. Meantime, Volvo is scrapping its plans to have all electric vehicles by 2030. The company is citing a need to be pragmatic and flexible amid cooling demand and changing market conditions, but says its long-term goal remains being a fully electric car maker. Volvo blames a slower than expected rollout of charging infrastructure, the loss of government incentives in some markets, and additional uncertainty prompted by recent tariffs. That's what's happening here in the U.S. Back over to you in Mumbai.
Well, now the US Federal Reserve's Beige Book survey shows that the economic activity was either flat or declining across most regions in the country. CNBC's Steve Leisman gets us more on this.
Fed's Beige Book, the collection of economic anecdotes from the 12th Federal Reserve banking districts, say economic activity grew slightly in just 3 districts. It was flat to declining in 9 districts. Overall, there is a dark tone to the Beige Book today. Employment levels, however, were steady. There were some reports of reduced hours and shifts, lower employment through attrition. However, reports of layoffs remain rare, the Beige Book says. Wage growth was modest, good news for the Fed's inflation fighting. Non-labor input costs show slight to moderate gains. Again, good inflation news, but consumer spending ticked down in most districts. Haven't seen that in a while. Auto sales varied, but there were some declines reported due specifically to higher interest rates that come with auto loans these days. Manufacturing activity declined in most districts, so that's consumer spending and manufacturing. Most districts did report also softer home sales. The economy, however, was expected to remain stable or improve in the coming months. A little bit more unemployment here. Firms were feeling less pressure to increase wages, a greater availability of workers, and you saw some of that in this morning's JOLTS report. Prices overall rose modestly. There were some increases in both freight and insurance costs. Guys, this we have the economy running, I don't know what you want to call it, 2 to 3% in the tracking surveys, but this doesn't sound like a 2 to 3% running economy from this Beige Book.
Some very important macro data lined up in the US for the next 2 days. Let us now get you the final update on the global market wrap this morning. The European markets ended Wednesday's trading session sharply lower as tech stocks led the losses. The French CAC closed nearly 1% down, while the German DAX shed over 150 points as well. The British FTSE also ended 0.3% lower. Now, in the pan-European stock 600 index, also saw a provisional closing of 1% in the red in yesterday's trading session, with most sectors and major bourses in the negative territory. Well, that's all we have on the global market action, but how will all of these cues impact our own markets? We have our research team joining in with the trade setup, the stocks that are likely to be in the news, and of course the setup on the F&O side of things. First up, Vivek joins in to get all the market cues we need to watch out for today. Vivek, good morning. It is a subdued handover, but the GIFT Nifty suggesting a pretty good start.
Well, good morning, and you're absolutely right. So lackluster set of cues is what we've seen from the global markets, like you mentioned at the start. US, Europe, both of them ending lower. What's actually boded quite well is the fact that oil prices too have continued to go lower, and in fact now at a fresh 9-month low. When you're talking about WTI crude, yesterday it slipped below the $70 a barrel mark. So once again today, the focus will be on oil sensitives like OMCs as well as paint companies. Now coming to the Indian markets yesterday, in line with the global markets did fall. And in fact, we went ahead and snapped a 14-day winning streak. But what we actually saw throughout the trading session was that there was significant buying emerge at every dip, and we ended well off the session lows. Now, along with that, the small cap index was something that actually outperformed the benchmark indices. And like we mentioned, what actually did well in yesterday's trading session were the oil sensitives. So names like the entire OMC pack, names like BPCL, HPCL, IOCL, the entire paint pack, Asian Paints, Berger, all of them did very well. But on the other hand, tracking the fall in Nasdaq, you did see the IT pack fall quite significantly in the session. What is it that we will be watching out for today? Now, one of the main events today will be the fact that Reliance will be considering the bonus issue in the ratio of 1:1. Raymond Lifestyle, the main business as far as Raymond is concerned, will list today. Like you mentioned, Asian markets, GIFT Nifty, Asian markets mixed, GIFT Nifty indicating a gap up start for us.
Vivek, thanks a lot for that update. Over to Sudarshan now, who joins in with you, the stocks that you need to watch out for this morning. Sudarshan, good morning. What's on your list?
Morning, Horma. So we'll start with Reliance Industries. Heavy Industries Ministry has awarded 10 gigawatt capacity under PLI ACC scheme, that ACC Advanced Chemistry Cell. And besides this, today Reliance Industries board will be considering bonus issue in the ratio of 1:1 for Suzlon Energy. It has sold One Earth property for ₹440 crore to OE Business Park. Century Textiles has announced that it will give corporate guarantee of up to ₹400 crore to Hindalco for a land parcel in Thane. Sona BLW QIP is launched, and sources say company is looking to raise up to ₹2,400 crore and indicative price in the range of 675 to ₹700 per share. GIC-RE government has announced that it will exercise oversubscription option in the OFS, and for non-retail investors, OFS was subscribed 1x, and for retail investors, OFS will open today. Glenmark Pharma, it has settled with US Department of Justice, and this settlement is for false claims and anti-kickback investigation. Company will be paying $25 million, 6 installments over 5 years. Apollo Hospitals has incorporated subsidiary for insurance business, Allied Blenders, to acquire up to 80% stake in a company to be formed with 050 talent, and this company is represented by actor Ranveer Singh, and this JV to be formed for luxury and premium spirits business.
Darshan, thanks a lot for that. But stay on. Tell us also cues from the F&O space. What's the setup looking like over there?
So if you talk about yesterday's session, it was not a bad day of trade. We made a sharp intraday recovery, and at the close, we closed almost near day's high. And as far as today is concerned, after subdued global cues, GIFT Nifty is indicating a start with a huge gains. Talking about institutional activities, we continue to see buying by both FIs and DIs. FIs bought shares of almost ₹1,000 crore, DIs bought shares of almost ₹100 crore. But in index futures, we saw FIs selling more than ₹1,300 crore. And they have added net long contracts of almost 2.20 lakhs, and with this long exposure now stands at 68%. On the option side, we saw major activities in the call side. In 25,200 call, where we saw addition of almost 41 lakh shares with premium at 54. For 25,300 call, we saw addition of 31 lakh shares with premium at 22. And on the put side, 25,000 put has seen addition of almost 33 lakh shares with premium at 17. And in 25,100 put, we saw addition of almost 30 lakh shares with premium at 39. With this, important levels for Nifty, support is seen now at 25,100 and resistance is now at 25,300 or above that. For Nifty Bank, support is seen at 51,260 and resistance is 51,700. That is the recent high. In stocks to focus, 4 stocks are in the band. New entrant is RBL, and 3 stocks that are still existing in the band. Those are AB Fashion, Balrampur Chini and Hindustan Copper.
Some important levels to watch out for. Sudarshan, thanks a lot for sharing that update on the F&O side as well. Time for a short break. Up next, Sebi has refuted allegations over employees citing a toxic work culture within the organization. Stay tuned. Back on the other side with this story and a lot more. Welcome back. Now, from likely relief for the real estate sector to some cancer drugs becoming cheaper, the upcoming GST Council meet could see some very important decisions impacting a number of sectors. Timsy is joining in with the GST Council meeting agenda. Timsy.
Well, that's right. What we are learning from sources is that the GST Council is likely to get a breather for property buyers and real estate sector. Council is likely to issue clarity on 3 particular subjects. Sources say that the council is likely to say that any charges paid for a preferential location along with construction service cost for a residential complex before the completion certificate is issued. In such a case, GST will be charged as a composite supply. Secondly, GST to be charged only on the construction service value and not on the value of the land while buying a residential apartment or a commercial property. Thirdly, to plug revenue leakages on commercial property renting, Council is likely to suggest that commercial property let out by an unregistered person to a registered person to be taxed at 18% on reverse charge mechanism. Currently, it was being charged at 18% on forward charge mechanism. Apart from this, GST Council is likely to cut GST rates on select cancer drugs from 12% to 5% to make cancer treatment affordable in the country. Next could be on the agenda. Sources say that the council could consider exempting GST on electricity meter services such as renting of a meter, testing charges, wire charges, etc., treating them as a composite supply. This could give a breather to both discoms and consumers. Rather, the council is also understood to approve a provision that the SLP that has been filed by the government in the Supreme Court against power distribution companies on this particular matter should be withdrawn. Sources also suggest that the council is likely to give a GST relief to film distributors and producers on the past demands before October 2021 by settling them in the claims on as-is, where-is basis. Now to be seen is what all the council approves when they meet next on September 9th.
Timsy, thanks a lot for that. Now, employees at Sebi have written to the Finance Ministry raising concerns over toxic work culture. Now, the letter, accessed by CNBC TV18, dated the 6th of August, stated that shouting, scolding and public humiliation had become a norm during meetings. Shivani Bajaj has filed this report.
Trouble for Sebi Chief Madhvipuri Butch. It seems sources suggest that Sebi employees have raised alarms about what they describe as a deeply toxic work environment under the current leadership. In a letter assessed by CNBC TV18, Sebi employees claim that fear has become a primary driving force within the organization, with unprofessional behavior becoming commonplace at the highest levels. Now, in a letter, employees report that shouting, scolding, and public humiliation have become the norm in meetings, creating an atmosphere of intimidation. They also criticize the management for imposing unrealistic KRA targets and intensifying monitoring, which has led to significant increase in stress-related mental health issues among staff. Remarkably, the letter also claims that even the mental health counselor at Sebi is said to be overburdened with number of employees seeking help. The situation has escalated to a point where even senior officials, the letter claims, are reportedly afraid to attend meetings. In response, Sebi employees are demanding the withdrawal of strict intraday attendance monitoring and calling for a more respectful and professional conduct from the senior management at the Securities and Exchange Board of India. There is also a growing call for leadership change, with employees rejecting the management's portrayal of these grievances as minor, insisting that these concerns be taken seriously and addressed promptly.
Shivani, thanks a lot for that. Now, Sebi has responded to the employees' letter written to the Finance Ministry, refuting allegations of the toxic work culture within the organization. Now, the market regulator pointed out that the employees' grievance stemmed from external factors, adding that the letter was aimed to leverage the work culture for a higher house rent allowance. Sebi's Employees Association also condemned these leaks and reaffirmed their commitment to resolve the grievances internally. Well, time for a short break here on Power Breakfast. Up next, we get you cues from the commodities market. Stay tuned, back on the other side. Back with us here on Power Breakfast. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Looks like there is no respite for oil prices yet.
Oh, yes. You know, the kind of decline that we've seen, Hormuz, in crude oil prices is really baffling. The Brent prices at one point in time in the intraday market hit a 14-month lows of 72.6, and we saw the WTI prices decline below 69 as well. So yes, there is a lot of pressure, but there's a bit of a ray of hope right now, as various reports suggest that OPEC and allies, which were going to increase production from the month of October, now could delay doing that. Well, remember, there are various layers in sense of what kind of an output cut we've seen coming from OPEC. Largely, all of the OPEC and allies have cut around 5.8 million barrels per day. And then remember, they added voluntary 2.2 million barrels to it on top of that. So that is what the OPEC was trying to phase out from the month of October until the next 1 year. But looks like there is a huge conversation going in that with the kind of decline in prices, weak demand from China, increase in supplies from non-OPEC, this could be delayed. And that's exactly the reason you have seen the decline kind of stopped right now in the Asian markets right now. But when you look at the metals, well, with the US dollar index at a 2-week highs, we've seen constant decline continuing here. So whether it is about gold trading at a 2-week low, silver at a 3-week lows, nickel prices at a 5-week lows, copper trading at a 2-week lows as well. So when it comes to the base metal prices, well, the declines have just about continued yet again in the Asian markets today.
Multiple headwinds for oil prices, but there is some ray of hope. Manisha, thanks a lot for that update. Finally, take a look at how the Asian markets are faring this morning. And it's been some choppy moves that we are seeing across the Asian screen, particularly in Japan. The Japanese markets had turned positive after a lower start, but now they are still down 0.5% as we speak. The Hang Seng is also currently trading flat. It's been the same since the start of the show. The Taiwanese index is continuing to hold on to their gains, almost with gains of 1.75%. The South Korean indices, though, have come off their highs. The Kospi at the start of the show was up over 1%. Now it's only with gains of 0.5% as we speak. So the benchmark indices in South Korea have come off the highs, and there are some very choppy moves seen in Japan as well. And pull up the GIFT Nifty, that continues to maintain a gap up start for our own markets of 110 points. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for today's trade.